Back to Simply BSI, or Simply Budget Save and Invest. Back again with another portfolio update. And as always, going to go over the options that accommodate for the $370 I generated in premium income this week. We can start off with the retirement accounts, of which, again, the Roth I don't really go over. You can see I hold shares of ETHA and Sound, both of which I'm down over 50% in, so it's an account I just like to ignore. So we're going to skip over that. The rollover is not much better. ETH, I was able to dollar call, or rather I got assigned on three cash secured puts on ETHA in my traditional IRA, which accommodates for the 300 shares I currently have at the average cost basis of $14.35 here. Robinhood, I'm also down pretty significantly in. I have 200 shares at the average cost basis of $115. You can see here, I'm down about 30%, 33%. And we can see BMNR, again, down 44%. So I'm actually not doing so hot in this account as well. We can see I also have an open cash secured put in Robinhood at the $70 strike expiring next Friday. So I figured I'd keep playing Robinhood. I do like it as a long-term hold. I just got caught at the top, buying at the top. And it's about 50% down from highs. And as you can see, 33% down from my cost basis. So that one I'm going to hold on for a while. I'm thinking I might just sell a covered call, one covered call. Again, I have 200 shares, so I can sell one covered call at like the $120 strike, expiring like a year out from now, just to collect that option premium while I wait. That way, if there is between now and then that Robinhood does go back up to my cost basis, I can just sell the other 100 shares and just hold on to the 100 shares as collateral for the covered call. So I'm thinking that's my plan moving forward. With ETHA, I'm going to probably do the same thing. In this account in particular, I'm probably going to wheel 100 shares. So 100 shares, I'll sell a covered call pretty close to the cost basis, probably like $15. And another 100 shares, I'm probably going to sell a leap. But wait until I'm up a bit more in the shares before doing so. I'm probably going to wait until ETHA reaches a price of like $20, which would correlate to an Ethereum price of 2,500, I think it is. I don't know the exact correlation, but I have 300 shares of it. It's a long-term hold. I believe in ETHA. I believe in Robinhood. I just got caught. I got caught at the top, and I'm sure there are many other people out there that did as well. I'm just holding on to this and just sitting through the pain right now. But we can see overall I'm down 28% in this account, almost $9,000. And again, we're just going to sit it out. Not really playing too much. I do have about like 7,000-ish cash in this account that I'll be wheeling. Right now I'm using it though to wheel Robinhood. So we're going to be able to collect some option premium income still while we wait for these positions to recover. In the Robinhood account, we can see I have the same positions again. Amazon, I did sell a covered call when Amazon reached about like $215 It's pulled back a little bit since then to $212. So I just sold a $240 call expiring next Friday with no expectation of it actually getting assigned. Meaning, again, no expectation of Amazon closing above $240 by Friday close. I really do not feel confident in this market right now. Honestly, best case scenario is that we just trade sideways. That way I can just keep selling cash secured puts for some income while we wait for the market to recover, or at least wait for my positions to recover. Again, the overall market is actually doing pretty well. We're still hovering around all-time highs and just been trading sideways. Look at the SPYs, Qs, the Dow, of course, hitting 50,000, but individual stocks, individual large caps, individual blue caps, Mag 7, a lot of them are down 50% from all-time highs, or down like 30, 20%. So the overall stock market is doing well, but there are a lot of individual large cap stocks that are not. Robinhood, as I went over, not doing well. I'm down 50% in that position. And of course, a lot of the software stocks, they have been rebounding over the last few weeks. But again, this pullback Just started again Friday and Thursday, but we can see I have that Amazon covered call. I have two positions, Sound and Hood. In another video, I went over why I'm holding those positions. Again, I'm going to hold these shares of SoundHound and Robinhood until I'm back in my cost basis. So I figured I might as well buy a leap and double down because I do believe I'll be able to recover in that price, or rather the price of Robinhood will recover. SoundHound's trading around like $8.10. I think I have an average cost basis of like $10, so that I'll actually be selling covered calls on as well. While I wait, I'll probably just wait to open that position sometime early next week. And you can see I also have IBIT and ETHA. ETHA actually was able to close out 100 shares or sell 100 shares. One of my tax lots, I had average cost basis of like $14.50, so I closed it out when it reaches like $16. I actually kind of caught the high on that, so happy about that because it has pulled back since then. And that I believe I have like a $22 cost basis on these shares here, and about a $52 cost basis on IBIT. But you can see, again, same positions every week. Really just want to go over the options that close or expire this Friday that accommodate for the $370 I generated in option income. Just to quickly explain too, I do have a margin and individual account tab, but these are the same account. I just separate between positions I open on margin versus positions I open on cash. Or I opened using my cash. So in this case, the two positions I opened last week that expired Friday, utilizing margin, were an NVIDIA put that I sold at the $175 strike, and then a Microsoft put that I sold at the $392 strike. I like these because they have midday expiration day or midweek expiration days, Monday, Wednesday, Friday. So it gives you a chance to. Actually, might have to change this expiration date. That might be wrong, but it gives you a chance to have shorter expiration windows, where you don't have to have that cash locked to generate like a significant amount of money. So these are almost overnight. So I opened this on a Friday for expiration on a Monday, and I got $82 for it. This one I opened, same deal. It was on a Friday, expired that Monday, and got $89. So $150, $160, probably a little more actually, $170 for just holding those two positions overnight, pretty much, not including the weekend. In the individual account, again, still an individual account, but these are positions I opened with cash, or used cash rather. We can see the Amazon cash secured put I got about $9 for. This one actually I might have put the wrong week because I don't think I had one that expired this past Friday. Maybe I did. Let's see. Let's go into Amazon. I think I just put the wrong week. But while that loads, taking forever, so we have two SLV puts that I sold, both at the $69 strike. One of them I received $86 for. Again, I got more premium on this one because I sold it when SLV was at a lower price or closer to the strike price. Another one I only got $30 for, even though there was the same strike price but different expiration dates. The premium is basically based off where the actual underlying security is trading when you sell it. So when you're selling a put, you get more premium the closer. And actually, both sides. It's both for sells and for calls and puts. But essentially, for selling a put, the closer the strike, or rather, the closer the stock is trading at your strike, the more money you'll get. So in that case, again, when I sold this first one, SLV was trading closer to $69 than when I sold the second one. So I got a little more option income premium for that. Hopefully, I didn't over-explain that. But for those of you that are newer to selling options, hopefully that was helpful with that explanation. And again, going to the traditional account, I did have two calls, and actually one of these should be a put. What should be this one here? I had a call that expired worthless, so I just collected the $26 of premium for that, and I also got assigned on an ETHA put, $15 strike price. So again, that accommodates for over the course of the last month or so. I got assigned on three $15 ETHA puts. all of which I received the income option premium income for still. That's why I put my cost basis around that $14.30 area. But we take a look at Amazon real quick before I forget. We can see here my average cost basis is $238. That's why I sold that covered call at $240, because I don't ever want to sell a covered call at a strike lower than my cost basis. Again, basically there's no way to lose money in this scenario. I will always collect the option income premium, and if I do get assigned on it, I'm getting assigned at a strike higher than my cost basis. We can see here the recent positions that closed. So I did have, I don't think I had anything that can't or expired. So yeah, I have to change the date on that one. So this is I opened this on March 4th for 3/13 expiration, and I just closed a Amazon Leap for a small gain there, but yeah, let me change the date on this. So this should actually be week 11, 3/13. And what I'll do as well, I'm gonna have to update the graphic a little bit, but again, it just accounts for $9. So just subtract $9 from whatever is shown in the graphic, and that'll be the more accurate calculation or sum of the premiums I received this week from option contracts expiring. But again, as always, guys, thank you for tuning in. Like, comment, subscribe. Remember, not financial advice, all the things, and we'll see you next week.